Hello, fellows. So, from the chart, you can see clearly that we are more of indicators. So, we trade the foreign exchange market using indicators. On the chart, I have the Australian New Zealand currency pair, and we have a good number of indicators on the platform. We have the moving average, which is on the main chart, followed by the ADX and the MACD. Then we have the percentage R and the RSI combined with the Ichimoku to give us this particular setup you see here. Now this setup is built to permit me to have a better entries. So the main important things we have in trading, we have the money management, which is very key. I will have some videos to expose us on the way I manage my money, how I invest, my risk, the risk part on the structure, let's say. Then followed by psychology, of course, and then technical analysis. And here we are not price action people. We don't actually use the price action approach as the other traders. The majority of traders do. So we are focused on statistical tools like these indicators. So we trade the market using indicators. And so for our technical analysis, we'll be trying to looking at the basic indicators that comes with the MT4 platform. Since we in the mobile app, we don't have there's no room to add customized indicators. So my aim in this video is to show you how you can use the indicators that are provided through the platform, which are not the best. There are many more better options out there. You have to search for customized indicators, which after you do some tweak, you have a very good combination. So but this particular setup gives you an idea of how my trading process is all about. I use indicators, as I said earlier, and I have as you can see, a total of 5 to 7 indicators on the screen here. And what does this each do? Now the red line indicates what? A downward movement, well, short, tells us we are moving short, while the green line says long. That's just basic. For instance, now if we have green, it's not really green, it's actually lime, but I'll call it green. If you say, let's say green is above the red, when green is above the red, what does that indicate? It indicates we are going long. You can see clearly from here in this particular bar, we notice that the green line is above the red, so we are to go long. And if we went long here based on that indicator, guess what will happen? We will have stayed long till maybe what we'll have left somewhere here, and see we'll have made a total of 110 pips. Something is not bad. So green above red means long. Red above green definitely means the opposite, because here where we'll have X, you see that the red is above, the red here is above the green, the lime, whatever, and then we go short. So this indicator will follow these, and with strict money management will definitely end up being successful. I am trying to manage a 10 US dollar account, you see, approximately 11. So we are trying to see if we can grow this 10 to maybe 1,000. Let's see how it goes. So we will focus on one particular currency, and the currency that I picked out of the hundreds that are available, I choose the 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 Australian New Zealand, the Australian dollar and the New versus the New Zealand dollar currency pair. So that was for the ADX. Now for the moving average, which is this particular indicator on the chart, we see clearly that the way we do enter is once the currency, once the price, one price closes above the moving average. If price closes above the moving average, it's an indication of a longer position. So we go long if price closes above the moving average. Same way, if it closes below the moving average, we go short. Now the determination of the long or the shortward movement will be based on the other indicators. What do I mean? If, for instance, here we have a long, a moving average, say we are going long, and the ADX confirms that that is a long position, and our MACD confirms that we are in a long position, and the percentage R and the RSI combined with the Ichimoku tells us we are in a long position, definitely we go long. You see, in this particular case here, the three completely agreed. Not the three, actually we have 1, 2, 3, 4, 5. Basically the 5 completely said, or let's say 6 because the Ichimoku is part of it. But anyway, these particular 1, 2, 3, these 4 sets tells us we are to go long. So if we did enter long here, we would have exited somewhere here, definitely, because here we have short, and basically we have exited here. And how many pips will we have locked in? We would have locked in around 85 pips, which is not bad. It's good. So you see that this particular strategy that I'm showing you is very good because it permits you to enter the market at specific times. That is when all the indicators tells you to go long, you go long. If they say short, you go short. Now you definitely have to be patient because there are some cases where it asks you to go long and some other indicators say it's short. In those kind of scenarios, I will advise you do nothing. You wait till all your indicators says yes, we are in a long position, and then you can go long. Like here, you see clearly that in this particular bar, we have the ADX is saying something else. It's not giving us a short go there, but the MACD is saying we have to go short, and the others are also confirming the short. But we have one opposing. We remained locked in. We don't do anything. We wait for the next candle. But because the candle had already gone far beyond, it has gone far away from where would have been a perfect entry, we will not enter this trade. We will not enter this trade. So the idea is what? If my indicator says don't give me the best entry position, and the next candle, which gives me the entry position, is a lot of pips away. Let's see how many pips are we expecting here. We're expecting about 46 pips. So how many pips did the next candle move? The next candle moved a total of 26 pips, 20 pips against me. The math already against us, so we'll definitely leave it. We will not do anything because, let's say, because we're expecting here 46 pips. So you see, it's actually nailed at 46 pips. So that would have been a best entry, but 20 pips less is against us, is not to our favor. So not entering the trade here, there will have been a good thing, because here we'll have another entry indication, which we see clearly that we will have entered and end up what? Being in profit somehow. Yeah.